With hundreds of thousands of followers across all social media platforms, one of the biggest influencers in India for trading.
Trading on a prop firm requires a very different mindset. If you want to clear a prop firm account, you have to take an aggressive approach. I see people who say, take your time, it's okay, take 6 months to clear up phase 2 or something like that. I think that's wrong. I think that's bullshit. I don't believe in that. With a prop firm challenge, you should treat one account as one trade and you should be aggressive. You should go all out with that.
We are joined by Umar Punjabi, one of the biggest trading influencers coming out of India. We take a deep dive into trading psychology, risk management, and different beliefs of a trader when it comes to backtesting, stress testing, building a strategy, optimizing, and challenging each other on these kind of ideas.
I think even if somebody just studies time windows, they'll be able to develop multiple strategies across of that. I'll tell you another set of mine which I've tested. I call it the New York liquidity sweep. What happens usually is before the New York, I think every trade has a point of no return. If it reaches that particular point, there is a 90% chance it's not going to go back. It has to go in your direction. And that is where I would like to scale. If you trail your stop loss to break even, then you add another position and your second position stop loss is at your break even for the first position. You are still having the same risk, but your reward increases massively.
We didn't actually describe, let's say, your full A+ setup. So we mentioned the age range and continuation ideas, but I want to also hear a little bit more like exact criteria. You've come to your laptop and it's the key window. What is your step-by-step process of what do you look for and then how do you decide and how do you enter?
For me,
ladies and gents, welcome back to another episode. I'm joined by Umar, the #1 man in India. So we did an episode about a year ago, I reckon.
In March,
yes,
March 2024.
So pretty much a year ago, and the episode did really well.
Yeah.
And the reason I wanted to do a part 2, not only have we developed a friendship since, and we're in the same city, just observing you as a friend, I can see you've come a long way in this last year. So I wanted to kind of hear directly from you. Number one, if somebody has not seen you or has seen you, why should they watch this episode? Why should they stick around? And what has changed for you in the last year?
I think one of the biggest changes in the last year has been credibility. I think that's number one that I've been working on a lot, and all thanks to you, because after we posted that episode, I realized that I mean, I can come out and say that, I know how to trade and all of that. But at the end of the day, if I have nothing to show for, then why will people trust me? And that's when I started trading prop firms, because before that, I never traded prop firms. And I thought, you know what, I don't really want to reveal my personal numbers, but a good way to do that is trade prop firms, clear the accounts and show some payouts. And that's what I did. So it took me a few months to get the hang of it, because of course initially I was arrogant and I was like, you know what, I can clear it in a single trade and all that. I blew some accounts to get to know the rules and all of that stuff, but later on it worked out well.
So let's actually explore this topic of prop firms versus your own capital. And if you're, let's say, even just a year ago, you were trading only your personal capital, now getting your feet into all the prop firms that there are and leveraging max allocations on whatever you can. What was it like navigating that journey? Because it's easy for us to sit on a podcast and say, focus on your psychology, do this, do that, get funded. But then people are consistently blowing accounts and try. For someone that's been doing this for many years and considers themselves a professional, how hard or difficult, or how did you navigate the whole process of prop firms?
I think initially it's just about understanding the psychology that is required, the mindset that is required, and the rules. What I've realized is trading on a personal account requires a very different mindset, and trading on a prop firm requires a very different mindset. If you are trading on a prop firm account, if you think about it realistically, to clear any prop firm account, you need about 10 to 15% on an average, right? And people are aiming to do that in a month. But how many traders do you know who are making 10 to 15% a month consistently? Very few. Yeah. So if you want to clear a prop firm account, you have to take an aggressive approach. I see people who say, take your time. It's okay. Take a 6 month time to clear up phase 2 or something like that. I think that's wrong. I think that's bullshit. I don't believe in that. I think with a prop firm challenge, you should treat one account as one trade. And that one trade should have sub trades inside. And you should be aggressive. You should go all out with that. And
what do you mean by trading one account as one trade? Like meaning risk as much as you can.
Potentially,
just to not spend 6 months on one account, basically.
Exactly. Because
demo.
You have to fail fast. That's what I believe in. Because as long as you have a proven edge, as long as you have a backtested strategy, I think you should treat one account. Let's say I spent $500 on a 100K account, right? Now that's $500. That's my trade for a $500 account. Now 500 is what I'm risking, right? That's one trade of mine. Now I need to either clear it or I need to blow it. And if I do that over a, let's say, enough period of time, and if I have a proven edge, maybe 6 out of 10 accounts I'll clear if I have a edge. But if I'm wasting time on one account, waiting for the perfect setup, waiting for the perfect time, I'm just going to waste time.
Are you referring to this as like to help the psychology in the sense of you're not viewing your risk as 10K on the 100K. You have a 10K draw, and you're more seeing it as I spent 500, so my risk is only the 500 I spent.
Absolutely.
And this basically helps you navigate things better, I guess.
Absolutely, because the psychology with a prop firm cannot be what you have, because if you're trading a real account, all you have to lose is $100,000. If you're trading a real 100K account, you have to lose $100,000 if you blow it up. But if you blow a prop firm account, all you have to lose is $500. So why do you want to give yourself the extra headache of thinking that, oh, I'm managing a 100K account, and if I blow it, I lose 10,000. No, you're not losing anything. You're just losing $500. So just fail fast, test out your strategy, test out your edge. And if you blow an account, just buy another one.
Now, obviously you can speak from a place of, let's say, luxury, because you can afford, you know, if you blow 500, it's not going to affect your, let's say, your life. So you can maybe come with a 5K budget and see what happens.
Yep.
If you are in the other situation, which is I have only a few hundred or a few $1,000s in my savings, so each 500 counts. How would you approach it then if you're in that situation?
If I had just $1,000, I would buy maybe $10,000 accounts, $10,000 accounts, and I would still have 500 left. And I would navigate in those 10 accounts, because I believe in that if you just have $1,000 and if you trade that with real capital, you blow 50% of it, you immediately lose $500. But if you buy $10,000 accounts with $500, if you blow even 2, you have 8 accounts. And the amount of learning that you will gain in blowing 10, even if you, let's say, blow all 10, the amount of learning and insight you will gain on blowing 10 accounts is going to be much higher than what you will gain in just blowing $500 in one trade.
Yeah, for sure. I've seen that a lot of people saying, I spent years backtesting, years studying price action, but one account evaluation that they blew in the end anyway. I learned so much in that one month window, because in replay mode, the candles just jump and you see what happens. But in real life, you got to see the ups and the downs of that candle and go through the emotions of it and the pressure of real money, let's say. Now, when it comes to just the prop firm cycle of leveraging many accounts and kind of going with a budget, is the approach trade each account individually, or kind of all 10 on a copy trader and kind of maybe distribute in terms of time or in terms of setups? How do you approach it?
I think the best way and the way I do it is I like to trade an account individually. I don't want to expose one account to the other. And it is, for me, it is mainly, let's say if I have 2 setups, one for London, one for New York, one account is going to be for London, one is going to be for New York. And sometimes what I've also done is I categorize my setups into A setup, A plus setup, and B setups. I buy 3 accounts, and every account is for a specific setup. So my A plus setup accounts will get cleared very fast. Sometimes I don't get A plus setups. So the A setups, they get cleared very fast because they come frequently and they're good setups. So that's also a way I categorize my prop firm accounts.
Okay. Why have you chosen to categorize things as opposed to trade as you normally would on a live account? Why segment things on prop firms?
What I've realized is that, again, you need a different mindset. And when you categorize it, the risk exposure is just less. And also when you're trading a prop firm account, it also comes to your mind that, you know what, at the end it's just $500. And coming from a place where you have traded live capital and you're already trading, it just comes to your mind. There's also a downside to it where you start taking your prop firm accounts lightly. So I think categorization helps a lot in that.
As you said, you can end up taking things lightly. Did you maybe go too far to that direction of one trade, one account, full daily loss on an account and things like this? And people even do this as a specific strategy. Is that something advisable or something that you found benefit in, if you assuming you have the budget to afford to blow these accounts? Yeah,
I think that's doable, but it depends on what your edge is like. What I've realized is that in prop firm accounts, you do not need a high risk to reward ratio. You need a high win rate. And I've done an extensive study on this. I've made a YouTube video on this, that if you take out the statistical data in regards to the risk to reward ratio and the win rate, in a prop firm account, you have only 10% drawdown, max drawdown, and a daily drawdown is 4%, right? Now, if let's say I have a win rate of 60%, that means I will lose 4 trades out of 10. And I'll win 6 trades. Now, if those 4 trades come back to back, that's when I blow the account. But let's say if I have a win rate of 80% and a risk to reward ratio is very low, maybe 1:1.5 or 1:2, I will get only 2 losing trades. And the chances of, even if that happens back to back, I don't blow my account if I'm risking 2% per account. So the win rate factor is extremely important, I believe so. And a lot of people who trade high risk to reward ratio strategies in prop firm accounts, I've seen that it has not worked out very well for them, or it takes them a lot of time. But the people that I have seen, and for me personally as well, when I started using a strategy with a very high win rate and low risk reward ratio, it has worked out fantastically.
What did you do to improve your win rates or focus or prioritize high win rate trades for prop firms specifically?
So just basic stuff. If you have a backtested data of your strategy, so like my gold strategy that I trade for London, I saw after testing over a year, I saw that Mondays are not the best, Thursdays are not the best. So just stop trading Mondays and Thursday.
Okay.
Because Tuesdays are the best to trade London session on gold. So Tuesday is the day where I would like to risk more. Friday is decent. So Friday is the day where I would like to risk
interesting.
more.
So it's based on days of the week or time of day, as opposed to specific confirmations or specific supply demand, certain things.
I do have other confirmations as well. Like for example, if I'm trading London session, what I've observed, another thing is that if pre-London is trending for gold, the window between Asia close and London open, that 2 hour window, if that is trending, then London session won't trend. It happened right today. Today itself, London session was very sideways for gold because pre-London already gave a move. So that's also another factor that I would consider. Like if pre-London is trending, I'm not taking a trade.
I want to take a moment from the episode to remind you of Alpha Capital, a long-term sponsor of the show, a leading prop firm in the entire industry. And in the last year, they did over $50 million in payouts. That's why they are a top-ranked prop firm that's been around for years and is not going anywhere. And with the multiple step plans they have and the multiple packages that they have, there is going to be something catered specifically to your needs at the most competitive pricing. And because we have a long-term relationship with them, we are able to bring you a massive discount of 20% off all evaluations. So click the link in the description or use the code TOT to get 20% off all your funded accounts. Working with the best prop firm in the industry, Alpha Capital.
Right now, at the time we're filming, I don't know when we'll upload it, but things are going crazy in terms of trade wars is probably the way to put it, where Trump's throwing tariffs around. And that's obviously having an effect on the market, especially for trading gold. Do you in any way put in fundamentals, or are you a technicals only trader?
Technicals only. I don't really like to put in fundamentals. And to be very honest, I don't understand fundamentals. I'm not a person who's going to get into economics and understand those details. I do have a little bit of idea of how things works and all of that, how tariff affects stuff. But I think at the end of the day, market is going to discount it and charts tell everything. There's been so many times where if you just mark the right charts, the news flows into that direction. So I think technicals are enough to do that.
Yeah, and it's maybe technicals is like, if you're using generic technicals, then you will always be late, and you won't be able to sense what news will be doing. But I think the big players are laddering in their positions pre-news, and then news becomes the catalyst or an excuse to move price. But you can sense it if you read M1 and you know how to understand time manipulation. You can almost predict what news is more likely to do.
Absolutely.
Do you trade news as a strategy for prop firms?
No.
I know there's limitations on some, but because of the rules of prop firms, have you had to modify your approaches from your old days of your own capital?
Since the very start, I have not been a fan of news trading at all, because I believe that as a trader, you're a businessman, right? And as a businessman, you're supposed to do things which are under your control. And the more things you have under your business which are under your control, the more likely you are to make money. And if you have certain things which are out of your control, then the chances of you making money are lesser. Now, news is something that's completely out of your control. You might be the best technical analyst, or you might be the best fundamental analyst, but nobody is 100% about news. Nobody can 100% predict the news and how the market is going to react it. So I see it as a factor which is uncertain in my business, and I like to keep it away. So even before starting prop firm trading, I was not a news fan at all.
I saw this, I forgot who said it, but it was a guy basically saying about trading psychology that when somebody is in a trade, let's say a non-profitable trader is in a trade, when they go into a losing period or when they're going into drawdown and it's about to hit stop loss, instead of getting optimistic for a reversal, they get pessimistic and they get fearful and they start moving things. And when their trade is going into profit, they'll get pessimistic, like, oh, is it going to reverse on me and so forth. And he said a professional trader, they're the opposite, that when the trade is going into profit, they'll get even more optimistic and they will have confidence. And when trade is going into drawdown, they're not gonna start stressing. It was an interesting framework to take things from. And I wanted to hear from you your thoughts on just when you are approaching a loss or you are approaching a take profit level, what is your mental state like?
It's very rightly said, and I think I follow the same thing. I like to scale up my positions, and that's another strategy that I follow to clear prop firm accounts way, way fast. I cleared a 100K account yesterday itself with using the same strategy, just one trade. It took me one trade to clear out a prop firm account, and I enter a position with, let's say, a 2% risk. But when I start to develop conviction, let's say 1 minute time frame is giving me more conviction, more breakout structure, more sweeps, stuff like that. That's when I start scaling in my more positions. I love to scale positions. So as like you said, if it's going in my way, I like to scale more. I like to risk more, because I think every trade has a certain point where if there's a point of no return, like if it reaches that particular point, there is a 90% chance it's not going to go back. It has to go in your direction. And that is where I would like to scale. That is where I like to double up my position. I like to double up my risk. And until that point of time, let's say you've risked already 2%. Now the price goes in your favor. Let's say 1% goes in your favor. Now, if you trail your stop loss to break even, initial stop loss, and then you add another position, and your second position stop loss is at your break even for the first position,
yes,
you are still having the same risk, but your reward increases massively. So that's something that I like to do.
I completely can visualize what you're saying of laddering in positions and using your trailing stop loss to protect all positions.
Yeah.
How do you justify the entry when you are scaling in? So let's say your initial position had its reasons and now it's at break even.
Yeah.
And you're sensing it's coming back for retracement and it still should keep going in your direction.
Yeah.
How do you get into that next position? Just in terms of technicals, let's say.
In terms of technical, I look at the 1 minute time frame. 1 minute time frame and 5 minute time frame is what I look at. And I look for majorly imbalances. I look for order blocks. And let's say if there's a way big move on the 1 minute time frame, normally it has to retest that. When it retests that and it gives another candle closing in my favor, that's when I scale up.
So you don't put a limit on the order block. It's you arrive to the order block, you have a rejection candle, and then you enter after that.
Yeah, exactly. That I don't follow your approach.
So this is something I tested. I can see it's valid and it has its benefits as well, because those trades where it just goes directly to stop loss, which then in that case I'll be taking a loss and you won't be. But then on the flip side, there's the argument that there's those trades that is just tap and go.
Exactly.
And let's say you have a doji candle, you have an advantage now because you've got a candle that you can place a trade upon and it's not far away from the entry. But let's say the next candle isn't engulfing.
Yeah.
I would be in and I can already start to think to break even.
Exactly.
And now you're getting in at a very bad entry compared to mine.
Yeah.
So and I tested it, for me, it just got complicated. I didn't like it as much. So we can discuss it. What is the advantage you're seeing in waiting for a candle closure on M1, I guess?
Yeah.
As opposed to just a limit on a zone.
So what I've seen is gold doesn't like to do tap and go.
Okay.
It is, I've seen that work very well with forex pairs, way well, but gold doesn't like to do that. Gold loves to trap people. Gold loves to trick people, and that's why I've used this approach of waiting for the candle closing.
In fact, we should probably establish this because in the last year, I don't know if your trading has changed a lot or what things you've developed, but let's just do a walkthrough of like a A+ setup for you right now on something that you'll take on a prop firm.
So let's talk about my London setup, which I trade. I call it the London continuation. That's what I've named it.
Okay.
And
This is on gold.
This is on gold, yes. So what I've seen is that it all starts from Asia range. Now, so one of the major changes that have happened from in the last year in my trading is that I've started following time windows very strictly, because eventually when I started journaling and when I started reflecting on my trades, I realized that it's falling under the same time window. So it's not a coincidence. So that's when I started studying time windows much intensively. So it all started with Asia range. Now, if gold has an Asia range of less than $10 to $15, that's when London is going to give a big move. It happens 70 to 80% of the time.
Okay.
If Asia range is above $10 to $15, and then if price is moving, it has to sweep the internal liquidity of Asia for it to give a move in London.
Internal liquidity of Asia or Asia high, Asia low?
Internal liquidity of Asia.
Okay.
If it's wide.
Yes,
if it's narrow,
yes.
if it's less than $10, then Asia highs and Asian lows should be taken out for a good move in London. So that's what I look at. I keep Asia range as my reference. And let's say if it's less than $10, it takes out the highs, or if it takes out the low. Let's say my bias is long. It takes out the lows. I would be happy to see that it takes out the lows and it's
look for a reversal.
Giving a bullish reaction. Then let's say it has come to the midpoint of Asia range. Now I'll wait for London Open. The next break of structure in London Open on 5 minute is where I enter. My stop loss would be below that, and my target would be 1:3 or 1:2.
Okay. Why have you decided a 1 to 3, 1 to 2 take profit as opposed to technical based levels of taking profit?
So 1:3 has really worked out well for me in terms of testing, because London definitely like 70 to 80% of the time gives a very aggressive move, like no red candle move. It's just green for like 5-10 candles. And so 1:3 works out well. But what I've seen also is that when I use 1:3, my win rate goes down. So I like to keep it at 1:2 when I'm trading a prop firm account.
Why do you feel your win rate goes down when you target a 1 to 3? Are you not doing a break even?
No. But that is, I mean, if I start doing the break even or I start taking partials, my win rate would remain same. But generally, I still have achieved a higher win rate with 1:2.
Okay, interesting. Why have you chosen not to add in a fast break even protocol or just a break even protocol in general?
Because gold loves to retest the levels where it started the move from.
Okay,
so that happens quite often, and trailing stop loss to break even doesn't really work. What has worked well for me in this is taking half at 1:1, because if I take half at 1:1,
like a half profit.
Yes, 50% of the position. If I close at 1:1, that still pays me better than trailing my stop loss to break even.
Interesting. And then if it goes against you, you still had something.
Yeah, exactly.
It was like a break even through a partial.
Yes.
Interesting. When it comes to time windows, I guess you came to the decision through your trades and like these are where my better wins are and these are where the bad trades are.
Yeah.
So you kind of focus like the days of the week that you did. Is there any reason you think that price could be moving more aggressively in these hours that you've chosen to trade?
I think it's just the time when liquidity comes into the market. I'm reading a very interesting book. It's called Mind Over Markets by, I think, James Dalton. It's about volume profile and it's about time price opportunities. He calls it TPOs. That it mentions that time is the essence of the market, because time restricts the market to give a certain move in that limited period of time. And if the market has to give, let's say, a $10 move, and if it has only 2 hours to do it, it has to make at least 50% of the move in the first hour. So I think time is a very good way to understand when the price is going to give a move and when it is not. So that's one of the reasons why time windows really gained a lot of importance for me in my trading.
I think that makes complete sense. That when volume liquidity is coming into the market, that's when movements naturally will come. Have you also stayed with forex pairs, or is only gold?
It's only been gold. Very recently, I started trading US 100 and US 30.
Okay.
Yeah.
Why have you stayed away from forex pairs now?
I feel forex pairs are a little complicated. That's what I feel. The gold is lesser complicated, but forex pairs, you have to really get into the technicals. You have to go very deep down into it. But honestly, I feel you have to do that anyway for every other asset. But for forex, I just feel that they're not my cup of tea.
I think, to be honest, it makes sense where, let's say, major forex pairs, they have their trends where you'll have bullish periods, bearish periods, consolidated periods, whereas gold is a trending thing. Like it's just going to go up. It's been going up and every year it goes up. So you kind of have a built-in bias. Same with indexes.
Yes.
Apart from crashes like now that's happening, you just know, like, worst case scenario, look for a buy. So I think that helps frame things a little bit easier in terms of just advanced M1 technicals, which can get a bit tricky on forex pairs. Navigating towards you're now funded. Do you change your approach from prop firm, going to the challenges, trying to get funded as fast as possible? When you do have the allocations, what is your strategy then to actually, now ensure payouts?
So what I like to do is I like to be extremely aggressive initially in the evaluation phase. Once I clear it out, then I like to limit trades to 1 to 2 trades a month. And my goal is to take like 3 to 4% on a 100K account. $3,000 to $4,000 in a month is good enough for a 100K account. You just paid $500 for it. So that's what I like to do. But what I've seen is that when initially what I did was I used the aggressive approach for the evaluation as well as for the funded phase. And that's when I made around $10,000, $15,000 in payouts right in just like a month. But then the next month I lost all my funding. The next month I lost about $400,000 in funding. So then I realized, the aggressive approach is not going to work. I need to calm down when I'm in the live phase.
When was this situation? It was recently, or?
It was recently. This was about November, I think. November 2024, yes.
Yeah, and I've seen people try all approaches with prop firms, and I think there's no right or wrong, but it's just how you have your backup systems where, let's say you take the conservative approach. I've seen people do it, but then they kind of copy their trades on all their accounts. Let's say they have 20 accounts, it's the same trades across all. But then the guys that I've seen do the aggressive approach successfully is to avoid your situation of like, okay, now I don't have any capital. Now I have to go back to demo and challenges for another month. And I lost a month of earning, let's say. So your 2-month earnings were 1 month high, 1 month low, but the average was probably ordinary average. But let's say Andrew NFX, I don't know if you've met him, but he's done very well in prop firms, and his approach is be very aggressive, but one account at a time. And he just goes for 2%. So then when he's got this 2%, put that account away. But it's just, if you mess it up, you mess up one, you don't mess up your, your full allocation. Now that you've also seen yourself as a prop firm trader and also an influencer, I want to hear, let's say because you're the largest in India and in general, very, very large influencer, have prop firms, let's say, treated you different in any way? Or has there been any weird situations where you had to use your brand to say, okay, I need the payouts or something like that? Have you come across any of these scenarios?
Yes, absolutely. It happened with one of the prop firms, one of the very popular prop firms. I don't think they're very popular, but it did happen. So it was on a 100K funded account, and it was a $3,000 payout.
Okay, so not one that you'd expect them to do something about.
Yeah, okay. So it was $3,000 is fine. And I was accused of doing martingale. Now, so they had in their rules that they do martingale. They do not permit martingale. But martingale is basically adding additional positions after you've entered your position, right? That's what it is, right? Adding multiple positions or adding bigger positions after you have entered the first position, right? Now, what I did was in their account, so the trade was on US 30, okay? And the lot size they had was 20. The maximum lot size for US 30 they had was 20. So in one position, if I have to open, I can only open 20. If I have to open more than 20, I have to take another position.
Got it.
Right? So I opened 20. I wanted to open a position for 35 lots. I opened 20, then I opened 15. That trade made me about $4,000. Then when I requested the payout, I got accused of doing martingale. And then I did not understand, because do you not know your max lot size? Because if I have to open a 35 lot position, it has to be two positions.
Naturally so, and it won't be the exact same price. It will move naturally a bit.
Yeah, but it was exact same price. Okay. I was able to get the exact same price as well. Not exact. I mean, of course, there was minor difference, but majorly, yes, the difference was in decimals. But that is what I got accused of. And then I was like, I don't understand how this is martingale, because I have to open that much position. And you're permitting to open that much position. So then there was a lot of back and forth, and then it was a prop firm that I was also recommending to people. I mean, I was not promoting. There was no sort of association with them. I was recommending to people because I was using it. I got about $10,000 in payout from them. Then I was like, you know what? I sent them an email, and I was like, you know what? If I've told people to use your prop firm, I also got to tell them that they've got to stop using your prop firm because you're not paying me. You're not paying our traders. And then they were like, please don't do that. We'd be happy to pay you. Let's keep this confidential. And yeah, that did happen. It was a funny story.
Okay, very interesting.
As a trader, it's very simple. You have to find an edge, and then you have to have a mind so you can follow that edge. But how do you know if you're performing correctly or not? You have to know your data. And TradeZeller is going to show you everything that you need beyond the surface level win rates and performance and equity curve. It's going to show you detailed reports. It's going to be your back testing tool, strategy testing tool, playbooks, notes, and it's going to be a full journal. It makes your journaling easier, faster, and more meaningful. Whereas if you were just documenting on an Excel spreadsheet or taking screenshots on your iPhone, you wouldn't be able to pull out the data that you need, the correlations that the AI within TradeZeller is pulling out for you. There's so much variety and utility within the software that I think it's essential for any trader. So the link somewhere below is going to take you directly to the TradeZeller website. I'm not getting paid. This is for you. If you want it, if you like it, go ahead and explore it, and probably you'll be using it for years to come.
Yeah, it gets me thinking, where if you are someone that needs prop firms, you don't have a choice. And a lot of people can look at it as a defeatist mentality. And I think that's people in general. Like you look at the general population, you have certain people that see the same situation of tax, economy, inflation, cost of living. Some people get like, okay, back against the wall, let's go and be an entrepreneur, let's go work hard. Other people is like, well, the government might save me one day, and they just do nothing about it. The same is with prop firms, where you have this situation. You can either now complain about it and say, I'm not going to try or whatever, or you say, these are my rules, I'll try my best within it. Sometimes I'll face some crap that I can't do anything about, but you move on. And when you do look at someone that's, funded to $1 million and they're navigating 10 plus accounts, they lose one, but they still have 9. You go to another firm, you just cycle things around, you make it work.
You got to be smart with your accounts. And there also have been times where I've breached certain rules and I've been denied payouts, and I've not cried about it because I knew I was wrong in a place. And when I knew I was wrong, I was just brushed it off. I made a mistake.
That thing of, like you said, of treat your trading like a business. It's like, these are just cost of business.
100%.
Like you just had a payment, a refund request, or this payment got denied. Or I don't know. Like you just have these hiccups in business. You have it in prop firms too, and life goes on.
Yeah.
Now that you are, let's say, you've had experience in both, where you've had extensive experience in props and extensive periods without props. What is your preference?
I prefer, so it depends on from what perspective you're coming from. If you're coming from a perspective where you want to make a lot of money quick from a small amount of capital, then I think prop firms is the way to go. If you're talking about long-term wealth, long-term money, consistent money, then that's where personal capital comes in. I think that's where it's very, very important. Prop firms, I don't think it can be a long-term thing. Maybe some people would argue, but I personally don't think it can be a long-term thing for a
You mean
trader.
like the regulation stuff, or?
Not necessarily. Yes, that can be a factor as well. But what I mean is, you cannot trust your livelihood on a prop firm because you don't know if you're going to get paid or not. You don't know whether there's going to be a new rule or not. But with a broker, everything is in your hands. If you've got a trusted broker, you know you're going to get paid if you make money. So from that perspective, I don't think you should run your house on a prop firm account.
I see what you mean. Yeah, and as the industry has, in fact, we were with some guys yesterday who are navigating crypto prop firms, and it's a brand new market.
Yeah.
So like the rules are easier, like everything is easier, and because there's less competition. And now in, let's say, forex or typical prop firms, there's hundreds of them, literally hundreds. So then the prices are as cheap as they can possibly make them because they have to compete on price.
Exactly.
The conditions are as easy as they can be because people are going to pick on these things. So it is also on the flip side, like the best time to be a prop firm trader ever.
Exactly,
Because
100%.
if you had the choice of two, only those two, both of them would do stuff, and you'd have no choice.
Yeah.
But as a consumer now, we have a choice of 50, and you know, therefore the laws of the marketplace is competition helps the consumer in the end. When it comes to just your position as an influencer, you were mentioning to me yesterday that you started to now live stream and you know, let's say, put your neck on the line. And my first question to you was not necessarily why or whatever. It was more like, okay, how did you handle it? How was it for you as an individual? That additional pressure. So I want to put that question again so others can maybe hear.
Yeah. So live streaming, I honestly thought that it'll just be me doing the same thing on camera. But what I realized was it unlocked a new level of psychology for me because one word from me or one decision from me is going to trigger 200 extra entries in the market, not necessarily live or demo, but 200 people.
Responsibility.
Yeah, there's basically more responsibility, right? So I think I have become more conscious about my decisions. I've become more disciplined, and I'm really grateful that I took this decision of taking my trades live on live stream. It has really helped me.
What made you take the decision in the first place?
I think it was again coming from a perspective of credibility. I think I think anybody who live streams and who can execute trades on live stream with a good track record, I don't think there's any better way to prove that you know what you're doing.
Yeah, that's the one thing that can't be faked.
You just cannot fake it. You can fake everything, you cannot fake that.
Literally, like we can get into that if we want, but like even brokers stuff can be faked. My FX can be faked. Even prop firm certificates. A lot of even the QR codes.
Absolutely.
I've heard influencers they can get backdoor deals of fake QR codes, fake certificates. So this industry is full of all that smoke and mirrors. But even in my experience of the live trades that I was doing on Twitter, it was a challenge in the beginning, but I think, like you said, you rise to it. But not about, let's say, the pressure. You're aware of the responsibility. You're aware that a lot of people will be now taking decisions based on what you say. But also the short-term vision that people tend to have of like, you're only as good as your last trade. It doesn't matter if you're 50% up. What did you do this trade? Because if you took a loss today, but you're 50% up, they're angry.
100%.
And I think that's the nature of people. So I think that added pressure, at least for me, it was like...
That happened with me as well. When I started 2 months ago, live streaming inside my community. In the first month, I had like a losing streak of 3 trades. Just 3 trades. I was down like 4% on that.
Normal, ordinary, happens to
Normal,
everyone.
very normal, very ordinary. But I had to face a lot of backlash that, you know what, you just started off. I think you don't know how to trade. I think you've been a scammer all while. So I did get a backlash, but the next month was like 10x of what we lost. So the next month was very aggressive, very good, very well, and eventually people got to know.
One thing that I found for me as a benefit of I just have the notifications off on Twitter, which is where I was hosting my signals, and I tried to avoid reading comments because I don't want to get too confident when I take a win based on inflated ego of myself, of people gassing me up and saying X, Y, Z. But I also don't want to get too defeated in the loss. And I just thought remove that pressure, let's say. Even when I live stream to my members as well, I do it with camera off. I don't know about you. I do a camera off and no mic. And the reason for that is because number one, I get distracted. So they're going to ask me questions and it turns into an extended Q&A. I was like, I'm just going to type my thoughts on screen. If I'm entering, I'll put the position there. You guys can just see what's going on. Because I just want to be in my own bubble and I don't want to have these external factors. However, the one benefit I found, which is probably what you're alluding to, you think twice before you place the trade.
For sure.
You're thinking once for yourself and then you're thinking once of like, do I want my reputation to be attached to this decision? And I think that even after 9 years of trading for myself, it helped me a lot.
Yes, absolutely.
And it was another lens. And for me now, it's like, I would recommend that for everyone.
Yes.
It doesn't necessarily mean live stream on a platform or on social media, but like if you're trading with your friends, do a stream with your friends and call decisions to each other and let them echo back their thoughts or not, depending on how influenced you get. But just that second layer of accountability stops you doing at least the bare minimum of 3 trades in 10 minutes of like, okay, you just revenge trading.
Yeah, exactly.
That's not going to happen if you've got people watching. So these things can eradicate a lot of psychology problems. And that responsibility, I think, made me, and it sounds like for you too, a better trader.
I think it just removes so if you have 3 category of setups, A, B, and C, I think it just completely discards the C because you're not going to do it anyway. Or if you're going to do it by yourself, maybe you would say, you know what, let's take this. Let's just risk like 0.5% on, let's just do it. You wouldn't do it.
On the flip side, have you found, for example, I remember when I started it, so you're on month 2, I remember I was a bit too conservative because I was overthinking. Let's say I didn't want to take a loss. And that made me also very slow as a trader, or I would break even too aggressively, or I'd take a partial very early just to, panic states of like, let's build a profit buffer. And also that's not favorable as a trader myself. Have you found any emotionalities come out or different layers come out as you are doing this?
I think it did happen in the first month when I lost 3 trades in a row. That's when it did come out. In fact, I was not conservative ever. I think I'm just aggressive in general as a person as well, and it reflects in my trading. So, but definitely it did make me feel bad that, you know what, I just started off. When you start something, you want it to go well, you want it to go good. But at the end of the day, I know that it's just market doing its thing. We're going to bounce back stronger as long as we follow our rules and we stick to our edge.
We didn't actually describe, let's say, a full A+ setup. So we mentioned, let's say, the age range and continuation ideas. But I want to also hear a little bit more like exact criteria. Let's say, are you looking at 1 hour, 4 hour M15, or are you only on the lower time frames? Let's do a full top-down walkthrough of like, you've come to your laptop and it's the key window. What is your step-by-step process of what do you look for, and then how do you decide and how do you enter?
So the first thing I do is, of course, I start from a 4-hour time frame. I like to develop my bias before I do anything else, and my bias is basis of the 4-hour structure. What I really enjoy doing is forming biases when the market is in complex pullbacks. I love doing that, and I love to see how the market plays out. What I've observed is that when the market gives a very big move, like a very big drop or a very big upside move, it tends to go into a complex pullback for like maybe 2-3 days, and that's when I take a pause if that's happened. But if the market is trending, the bias, developing a bias is very simple. So I develop my bias. Then I start off with Asia session. Like I said.
Sorry, will you only trade with the 4-hour trend, or you're okay with trading the pullback as well?
I'm okay with trading the pullback as well. That's what I mean by when it goes into a pullback or a complex pullback. I am okay with the trading there as well. Because at the end, I think I'm not even day trading. I'm trading just one session of the entire day. So it doesn't really matter what the 4-hour time frame is doing. It is good to take reference. It is good to build confluence, but it's not that serious.
So the crypto bull market is well upon us, and with opportunities left, right, and center, why not utilize other people's money instead of your hard-earned money? So introducing to you the world's first crypto prop firm, Bitfunded. And they've partnered up with an exchange to bring not only the world's first crypto prop firm, but actually a prop firm that has an exchange-like environment. Imagine as if you're trading on Binance. With all the benefits that prop firms bring, with the leverage you can have, or hundreds of thousands of dollars in buying power, utilizing other people's money, so your total risk is just a couple $100 max, or as cheap as $79. And with the special offer that they have going on right now for you as a Titans of Tomorrow viewer, if you buy 2 prop firm accounts, you'll get a 3rd one for free. So click the link below this video to head over to the Bitfunded website and start to utilize other people's money to benefit from the crypto markets whilst minimizing your downside.
After that, so you've done your 4-hour, let's say, zones and direction. Let's say you've established your in a pullback, you've got your supply zone, and this is the demand for the new trend. You got this little section to trade. So now you've got your zones. What are you doing next time frame?
Next I go to the 15-minute or the 5-minute. I look at the Asia range. Asia range is, if it's tight, less than $10, then what I like to do is I like to wait for the high sweep or the low sweep, which generally happens in the pre-London session. if that has happened, I would like to wait. So a sweep of the high or low, if Asia range is tight, activates entry for me in London when London opens.
So let's say the sweep is happening. There's a lot of things here to also understand. So now this is your Asia low.
Yeah.
You're now this much through, this much through, this much through. How do you know, number one, when your sweep is complete? And are you also looking left to say, okay, I need to be in a point of interest, or is the sweep alone without a demand area enough?
I like to pair it with previous days New York zones. It's very well respected.
The highs and lows of the zones, or the supply demand of the previous day?
Supply demand of the previous New York session. I've noticed that it is respected in the next day as well very well. So major zones, basically a level from where there's been a major move. And this has been the fundamental of my gold strategy. Last time we did discuss the same thing. This has been the essence of my gold strategy. So I like to pair it with New York day zones, previous day zones. And not necessarily, I mean, it could be a Asia range set support as well. And now if we're talking about the low sweep, it could be any sort of support level on the previous day. Any session doesn't really matter. But what I like to see is if there's a low sweep, I want to see a bullish reaction. Let's say it gives a bullish reaction, comes to the middle of Asia range now. And now when London opens, if I get a bullish break of structure, that's when I enter. So that's setup one. Now setup two is where Asia range is wide. It's $10 to $15, sometimes $20.
Actually, before we move on to the differentiation on Asia range, let's say it's the first example, and your sweep has not happened pre-London. You're still inside your Asia range on London Open. Is that a day for you, like no trade for me, or you will still wait for the sweep?
So I have a very simple rule: no sweep, no setup. So if there's
no sweep before the London Open.
Yes, no sweep before the London Open, no setup for me.
Okay.
So I do not trade.
So then you will just say, okay, no sweep, wait for New York now.
Yeah.
Okay, how interesting. Okay, in that case, yes, let's move on to your next one. The larger Asia range, yes.
So when it's wider than $10 to $15, that's when I would like to see an internal liquidity sweep of Asia range. So if Asia range has made higher highs and higher lows, I would like to maybe see a trend line sweep, maybe see a structure sweep, whatever it is. If it's done and if it has given me a bullish reaction, I would wait for London Open again. Now that activates my entry. Now I wait for London Open. London Open, I get a break of structure in 5 minutes. I enter. My stop loss is below. Simple 1:2.
Mm-hmm. Instead of saying no sweep, no trade, how about no raid, no trade?
Yeah.
It rhymes.
Yeah.
I think that's an ICT thing. I'm not sure. I heard it around somewhere.
Really?
Yeah. But, okay. I mean, to be honest, I'm very aligned with these kind of principles. Time window again is one of the most important things, and the essence of the market is liquidity.
Yeah.
If you don't find a sweep, okay, you can still do supply and demand, support and resistance. All these things have its merit, but I think it's an advantage to utilize a form of a sweep. What is your lower time frame entry drill? So let's say you found the sweep, you've got the time window. Is it something just as simple as a break of structure, or how are you positioning it? Or is break of structure, doji candle, I should say. Is that the lower time frame entry model?
For me, the entry model it depends on what kind of structure I'm at. So if let's say it's a fresh structure, like the price has just made a high, then higher low. Yes. And if it's breaching the higher high for the first time, I'd like to wait for a 5 minute candle close. If it has let's say touched that, it's made equal highs like 2 times. If it's the third touch, it's going to be the third touch. I like to take an impulse entry where I don't wait for a candle close, because in those scenarios, it's majorly, it just explodes. It just goes up.
Mm-hmm. And in the scenario where you're waiting for the candle closure, is it a buy stop, sell stop, or is it just market execution on the candle closure?
It's market execution on the candle closure.
And the risk is the previous low on M1, or is the actual M1 candle itself?
No, it's the previous low.
Got it.
Yeah, and when it's an impulse entry, that's when it's a buy stop or.
Got it. Okay.
Yeah.
And how about, let's say it's not a doji candle or a rejection candle, it's just an engulfing, or like your stop loss is now larger because you had to wait for the candle and now it's moving out of a normal range of your stop loss. Do you have a qualification of like, okay, if it's above X amount of points, I don't take the trade anymore? Or you'll just take it and assume, okay, I'm not going to get the same risk to reward?
Yeah, so most of the time I do take it. And I realize if the stop loss is too wide, I realize and I know it. It's just intuition. And I do realize looking at because London, it gives you a maximum move of about $10 to $20, not more than that. So now I know that if the average I'm going to get is $15 in reward, my stop loss cannot be more than $7.
Sure.
If I want to have 1:2.
So in that scenario, instead of protecting you with yourself of your stop loss on the, let's say the M1 low, as we just mentioned, why not put it on the candle now? So you save a little bit, and you're likely, if you've already got a nice engulfing candle, that's probably not going to go test that low anymore. unless it's just failing and it's going in the other direction.
Yeah.
Is that something that has assisted or?
Yes. So I like to do that when I scale my position. So even let's say if I've gotten a wide stop loss, I'd like to enter a small position. Then if it's giving me more conviction, if it's given another breakup structure, I like to scale more and then trail my stop losses. So in that scenario, even if my original trade doesn't achieve 1:2, I still achieve 1:2 on my capital.
You also mentioned on take profit ideas of sometimes you'll take at 1-to-1, you'll take half your volume.
Yeah.
At other times, full volume at 1-to-2, other times at 1-to-3.
Yeah.
How do you decide which one to do at which day?
So I have a system where I like to see previous charts, and if like let's say I'm trading London, okay, now price is supposed to go up according to my analysis, and it's starting to go up now. If there's previous days New York where there was a resistance, or let's say Asia range where there was a resistance, or whatever sort of level which could be a potential resistance, I like to observe how the price is reacting over there. If the price, let's say, gives me a 5-minute bearish candle, that's when I would like to take half, 1:1, or whatever. Doesn't matter what the risk reward ratio is. If I get a bearish candle, I take half, trail my stop loss to break even, because then there's a chance the market is telling me there could be a potential reversal. Then if let's say if it's just continuously going, the momentum is high, that's when I hold full. I don't panic and I wait till my TP.
And I can sense basically you're doing the average session volatility, the average session movement is your approximately your take profit level.
Yeah.
What about just the average daily range or average weekly range? Leaving a runner, if you are going with the trend, let's say, do you have the idea of like, okay, why not turn this intra-session to intraday or maybe even a swing?
Yeah.
Is that a concept you have or it's not your interest?
It's not my interest, because what I've observed, I've tried that for sure. But what I've observed is gold likes to give a move in London. Then before New York, it sweeps London highs and lows. It has to happen.
Oh, interesting.
Either high or low has to be swept before New York move comes in. So, and in fact, traders watching this can test this, because it's so evident, and it just proves that time windows are so important, and they're just windows of liquidity. London has to sweep Asia to give a move. New York has to sweep London to give a move. And that's one of the reasons why I've not been able to build a system where I could hold the trades for an extended period of time. Because eventually, if I'm taking an entry in London, it wouldn't make sense because I would get swept out.
This is a modeling I've experienced myself too, and that's why I asked, for example, when you sweep Asia, are you looking left or is there other considerations? I think, for example, the sweep that you're getting, not all sweeps are equal. Let's just put it, where a sweep of previous day high or low versus previous session high or low versus previous week high or low, these all have different meaning or impact. For example, I used to trade Asia high, Asia low sweeps with confirmation in time. I moved away from it because I wanted to be in a premium discount on general, on M15 over, and also just supply and demand zones. I think these assisted me. And then I moved even further and I just thought, okay, let me wait for a significant inducement. That's previous week high, low, or H4 structure, H1 structure. And then also my trade frequency got lower. And obviously then it has its pros and cons of it. What are sorts of things you're testing now? Because I can sense just from our conversation from a year ago, you've changed a lot, you've come a long way, and you've tested a lot and you've had a lot more ideas. But as we know, a job of a trader, it's never over either.
Yeah, exactly.
So what are sorts of things that maybe you're looking towards or testing?
I've really developed a lot of interest in this concept. In fact, I saw this on Umar Ashraf's story. So he posted that the levels which gave a lot of volume on the previous day are respected very well on the next day. And I was like, you know what, let me try this out. And that's when I started testing US 30 and US 100, and that's where I developed a lot of more interest. You know me. I love to learn new stuff. I love to try out new stuff. So that's where I started testing stuff, and I realized that it works. Like if there's a level today in New York which has, let's say, had 70% of the volume of the day, the next day it has to tap. It has to tap it, or else it won't be a trending day. If the market wants to trend, it'll come test that level and then give a reversal, or it'll just open right there in that area and then start trending.
How do you identify that level? Because you're basically relying on identifying the correct zone, and if you get that zone wrong, you kind of mess up the whole thing.
Exactly, yes.
What is your criteria to define that zone of high liquidity of previous day?
It is majorly volume profile. Volume profile simplifies that a lot. Yeah.
You just simply pull the tool and see the peak. Okay.
Yeah.
Which you can do on gold or you can't?
You can.
Okay.
But it's kind of complicated. It doesn't really make a lot of sense in that. Because it's multiple sessions in the same asset.
Yeah. Okay. How about, because obviously now you're pivoting towards prop firms, and prop firms also have futures prop firms. I mean,
Yeah.
the US guys specifically, they're exclusively there, and I feel like it's a lot of people are migrating towards. Is that something you've considered, looked at, or you like where you are at?
I kind of like where I am. I have tried funding ticks. They just launched. I cleared a 50K evaluation as well. But I feel the rules are very restrictive overall in all
I think
the
it's down
futures.
to what we said earlier of
Yeah.
in the forex ones there's hundreds of prop firms, so
Yeah.
competition is there. In futures and cryptos there's only a few, so yeah, it's not as easy compared to forex.
And especially me knowing and coming from a place where I can already achieve hundreds of thousands of dollars in funding with prop firm or with personal capital, I wouldn't want to be in a place where I have to be extremely restricted towards my own trading. So I think futures is not for me.
So with the life I live, pretty much every single month I'm in multiple countries. So with all that traveling, what that means is I always delay going to the doctor. And you know what happens when you start Googling your symptoms or asking ChatGPT what's wrong with you? It ends up looking like that small bump is 5 types of cancer, and then you need to go to the emergency room right away. And I say all of this to say that you don't need to settle. And now the world has changed, but you don't need to waste your time or delay things or drive an hour and wait in queues, because when it comes to your health and finding the right professional, ZocDoc has got you covered. ZocDoc is a free app and website where you can compare high quality in-network doctors and click to instantly book your appointments, from mental health to dental health to primary care to even urgent care, where you can find the specialist that you need at a time that suits you and take the call from the comfort of your own home, and even select filters like will they accept your insurance. So stop putting off those doctor appointments and go to ZocDoc.com/Titans to find and instantly book your top rated doctor today. That's ZocDoc.com/Titans, ZocDoc.com/Titans. What is your goal in terms of just prop firm capital? Do you have a target, or you just, as it comes, let's say?
I don't necessarily have a goal. I did keep a goal of achieving $1 million in funding, but I feel that if I start to do that, I would really kind of start neglecting my own personal trading, and I felt like you know what, just look at it as a side income, just look at it as from perspective of testing things out and just letting it come as it comes.
Fair enough. What is your approaches on journaling, and how much time and effort do you put into it?
Every weekend I have a backtesting session with my community. We spend on average like 4 hours. Live. Yeah, we start about midnight, and we do it every Friday night. We start about midnight and we do it till 4 or 5 a.m. sometimes. The longest we've done is till 6 a.m. It was insane. We always have the highest number of people in the meeting at the start, and then most of them drop off by the end.
A few warriors at the end. Yeah. Okay. And you're just backtesting previous week or journaling the trades of the previous week?
So it's majorly refining the strategies more and more. Like the London strategy that I told you, it was not completely, but it was majorly different 6 months back. So it's just refining more strategy, like how can we improve our win rate. And like I told you recently, I removed Monday out of my trading, right? And so this strategy already had a win rate of about 80%. If you remove Mondays, it goes to up to 90%. And that sounds too good to be true, but that's what the data says. Now, of course, what I believe is that if you have like a win rate of 90% in backtesting, it may come down to 70 or 80%. So it does come down when it comes to real life, because of course variability comes in of your emotions and other stuff, but it's decent.
1 year ago, when we had this conversation, you were not a session trader, right? If I'm not mistaken. Were you intraday or swing? I forgot.
I was intraday. I preferred London session. I used to prefer London session, but I was not really focusing on time windows.
I see.
And
so why did you bring it down from intraday to intra-session? What were you seeking, or what advantage did you find?
So the advantage that I found was the same thing. If I used to enter in London and I used to hold up my position, I used to have a position which went in like 2 or 3 hours in my favor. And before New York starts, it just came back to my break even.
And you were chasing big RR basically back then.
I was chasing big RR. I was chasing big. In fact, I was open to holding trades for a few days, like for extended period of time. So and this happened to me like for a few months back to back, and I was like, something's wrong. I need to fix something. I need to start cutting my trades in the middle before it reverses before New York. And that's when I really got into session timings and study time windows and figure out how it works.
Now, with swing trading, I've spoken to a lot of great swing traders, so I can't say anything because it completely works. And obviously, even some big players, hedge funds are swing trading.
Yeah.
Medallion fund isn't. So there is both sides. But the thought that I've had lately is, swing trading, at least maybe in the way we're doing it, the way we are trading in terms of M1 and session volatility these ways, if that's generating the idea and that's generating the execution and the stop losses around those parameters. For example, if we take your entry or my entry, but then you put the stop loss on 4-hour structure, then you can probably swing trade it because your New York sweep is not going to affect anything.
Exactly.
You just forgive a huge stop loss, and then your risk reward is going to just be, you're going to hold it for a few weeks to get a 1-to-1 or 1-to-2 when you can get that in a session. My thoughts lately have been scalping, let's call it intra-session trading. I think for a retail trader that doesn't have a data edge in terms of insider information, let's say, or doesn't have a huge fundamentals edge, if you're purely a technical trader, I think intra-session, dare I say, is the only way. Like it's not even just the best way, it's the only way, because if you're doing it with prop firms, I mean, you have parameters and they are serving basically shorter term decisions. But it was also just from a degree of deviations, let's say, of I spoke to a few weeks ago Fabio, who's the world champion of futures on the Robbins World Cup. And in his World Cup of a quarter, he did 600 executions. And he's just a super scalper, let's say, like multiple positions a session and like really intense. But he's just going for very, very high win rates, very high probability, short micro movements and locking it in. And when you are taking it from that frame, you can get the same risk reward as someone who's doing a 1-to-3 on a 4-hour time frame and has to wait weeks. So then your rate of return is modified and so forth. But something that I read, it was a principle of Jim Simmons and the Medallion Fund, let's say. I watched a podcast on it, and the host was basically saying the degree of certainty of, like, today, if let's say gold is open at this price, in 5 minutes, you know it's going to be here or here. Like, it's just going to be within this box. 99% chance. But when I say to you, where's it going to be next year? Then that box has to be huge, because so much can happen in a 1 year period. And that's kind of how I view just trading now. It's like, okay, my degree of certainty is more confident in a direction and a close scope, the shorter in time frame that it is. So I've also shifted more and more towards just session. And lately, a navigation from me a year ago from our conversation, 1 to 10 was my TP2. So it's basically average session volatility, average daily volatility. These are my two levels. I'm also just considering, as you are now, just full volume at the 1 to 3, full volume at the session movements. And again, if you want in the next session, I'll just call it a day. Because if you're able to get a 1 to 3, you don't need a 1 to 20 or 1 to 50. These don't serve anyone really. So that's where my head's at. It looks like you're testing certain things too. I want to also give this opportunity for you. Obviously, you've been in the industry for a while, and you know, you've had your lessons, hard lessons, and your wins and triumphs. Just advice again to somebody watching who's new into trading, trying to navigate things, watching this podcast. What advice would you have for them?
I would say that the charts that are available, the charts, every single chart, everybody has access to the same chart. We're not looking at different charts, but there are profitable traders and there are unprofitable traders. So it's not about any sort of extraordinary information. Whatever information is there is already there right in front of your eyes. You need to just put some factors in place, learn like time windows, put time windows in place. I think even if somebody just studies time windows, they will be able to develop multiple strategies across of that. I'll tell you another set of mine which I've tested. I call it the New York liquidity sweep. And what happens usually is before the New York, like I told you, London, after that a reversal happens most of the time. So this is the sweep that I'm talking about. Now this sweep takes out whatever, either it takes out Asia range, London range, high or low, or both. And when this happens, if it gives you a break of structure and it goes up, when it comes down to test that break of structure, that's when you enter and it goes in your favor. So, and this happens a lot in New York. So how was I able to identify this? Purely because I put a time window indicator on the chart and I saw this happen again and again. And instead of buying a course or spending your money on some sort of mentorship, before doing that, I think just put time windows on the chart. Try to find some common patterns that you can. Open your eyes, try to find out some common patterns. And then even after identifying that, if you go into some mentorship, you'll have a lot of context. You'll be a more confident individual than somebody who's just a typical beginner. So I think studying price, liquidity, how it works, time window, I think these are the few things that you need.
It's very interesting. I actually posted a tweet yesterday, and it was basically to the thing of, it's crazy. 4 days in a row on GU, price action was identical.
Yeah.
And I don't remember if that's happened before, but like identical price action of Asia range was exactly the same in terms of size 5 days in a row. The sweep to Asia high was at the same time, at the same magnitude, and then it just trended in the other direction, no retracement. And I just posted it as a screenshot and I just said, like, guys, think about this.
Yeah.
Like
Exactly.
The answers are in the charts. You don't need a course or
100%.
whatever. It's just observe these patterns and think, why is this happening? And why did it happen every day? And what does it mean? And when you see a very extensive trend happening, and you got to notice the nature of slow price action, fast price action, aggressive. Like these have meanings, and there's ways price, the language of price. There's ways that it moves. And for myself, I don't know about you in terms of, let's say, mentors now at this stage, but I haven't had a trading mentor officially. Let's say I'm learning every week in conversations, but I haven't bought a program or anything in many years. But I've learned so much in the last 5 years, and it's just because I look at the charts and I think, and I say, what's going on
100%.
here? Yeah,
I think charts tell you everything.
there we go. Umar, thank you very much for the round 2, and let's do it again in a year's time and see what's going on.
For sure, yeah.
Beautiful. Thank you, my man.
Thank you.